Hey everyone, John Henry here, slingshotfutures.com. This time around we're going to be talking about technical analysis on big moving stocks. In the previous tutorials we talked about how to find the big moving stocks. Once we locate them though, then what, right? What's the approach? What are we doing? How do we find the levels of support and resistance and all of that fun stuff? So one of the big problems that you run into with big moving stocks is, generally speaking, in the pre-market, they've had a lot of movement. And that big movement pre-market throws the charts off a little bit because it creates a bunch of these huge gaps and all these different situations that you're going to have to approach and try to figure out the best things about the chart, right? Big levels of support, big levels of resistance, things to use throughout the day. So one of the big ones on today's list, ASTC, that's Alpha Sandy Tango Charlie, with a big move to the upside. It's up right now 230%, and it's fallen quite a bit off of the highs already, so it was up a really big amount. So it pops up on scanners, and we're looking through it, and we look at the pre-market, and that's the first thing that comes in. And we look at this pre-market and look at this gorgeous pre-market move, just up, 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 up. That's what we want to see. So right off the bat, as soon as I find the stocks, I'm going to look at them in the pre-market and say, okay, showed up on my scanners. It's showing that it does have some decent movement. It's up, X amount of percent, whatever. But is there volume and is it moving pretty well? In this case, we can see on ASTC that it has some really nice pre-market movement that's lifting higher. Perfect. So we have a good trend established. It's looking really nice. It's generally staying nice and up. That's what we want to see. So now that we know that the pre-market looks pretty good, now we need to zoom out and say, okay, well, what are some levels that we might need to take a look at? This is where a daily chart comes into play. So looking on the daily chart, I want to look at all of the big levels that can cause some issues. Now, again, we're dealing with a big gap up. It closed the previous day down in the $1.50 area, and it's trading in the sixes right now. Well, that's going to leave a lot of levels behind, right? The previous major swing back here at $3.40, that's going to do nothing because we're way away from that. The next major swing above that at $5.37 might come into play, might not. We'll have to wait and see. And then we go back a little bit further. And really all I'm doing is I'm going back and marking up all of the major obvious swing highs because these are areas that become interesting. Now, not because, oh, it's a swing high, that's not the reason why they're interesting. Sure, it's a structural level in the markets, but you also have to put yourself in the shoes of all of the traders who may have gotten stuck previously. Remember, these big pumping stocks are generally garbage companies. There's nothing really going on. They're just getting pumped up. Well, if they're getting pumped, how often do you think a lot of people get stuck at the highs of those pump just to watch it go all the way down? I'll just keep holding. I'll treat it like crypto. I'll hodl the whole way, right? They just keep holding and holding and holding until they watch their entire investment go to basically zero. When it starts popping up, that's their chance to get out, right? So these areas are hugely interesting. Not just because they're structural, but because it's filling in a lot of opportunities that traders have been holding forever in a negative position are finally able to get out at break even or better. They might have even made something on it, which is probably even worse for the learning curve. But we look backward and we can see, okay, well, all the traders who might have got stuck at 340, they're way in the profit. Traders who got stuck at 537, they're way in the profit. Keep in mind, we opened here. So all the traders at 660, that's an area of interest because we open up and we're above where they got stuck at the top. Right? Now, a lot of traders, they might have got stuck somewhere inside of there, but this is the peak, and that's the part that I care about because there will have been a buyer at that high, guaranteed, and they've been sitting through a drawdown for, well, since September of 2017 until they've finally been given a chance. And we're opening just above that 660 mark. So this 660 level is going to be very interesting. Along with that, the next one below after that is at 715. So this is creating a zone inside of here of interest that a lot of traders who may have been negative are finally able to get out with a really small loss, a really small gain, and just get rid of the trade, right? Above that, we go even further back and say, okay, well, the next one above that, big one, 660, we've got 715, and then a big one up at the $9 mark. So these are the levels that I want to keep my eyes on because these could potentially be big players in today's movement. Now, if we close this down a little bit and we look at those levels on the intraday chart, remember that $6.60, the $6.60 mark, and the $7.15 mark? Yeah, you better believe that those were huge levels of support and resistance in this case throughout the day. Because remember, those buyers who got in here, they've been stuck for ages just hoping that it comes back up, and it finally comes back up. It opens up just above their entry point, and they liquidate. and it causes a quick little sell wash to the downside, where it then gets picked back up again off of that break-even point. They tried defending it, catching a rally up. Now these traders are in the green. They start exiting, causing a drop back down. The 660 buyers defend again, pushing back up. These buyers who were in, now they were at break-even, then it went back to a loss. Now they're back in the green. They start selling again. You get the idea. This is a psychological warfare in these kinds of areas. And when it starts cracking down, look at what happens when it comes back, right? A lot of these traders, think about it. Let's put yourself in the shoes of a new trader, and we've all been there, right? A new trader who got into a stock, held it forever because, well, they realize they're on the wrong side of it. They learn their lesson from it, but they're still holding it. There's still that little shred of hope in there that maybe it's going to come back. And then it comes back, and they start getting greedy. And that's a very common trait for newer traders. It comes back and they say, ooh, man, yeah, I knew I should have held this, right? This thing's going to the moon, right? And then it winds up going underneath them, looking really good. They were up a huge profit if they were in at 660, and they still held it and held it and held it because they didn't exit when it dropped before. Why are they going to exit now, right? Now it starts dipping below their break-even point, and now they're at a loss. They were looking at a loss for months and months and months and months. They finally saw a beautiful green number, but they didn't take it because they got greedy. It comes all the way back down to break-even. Now it's under. Guess what's going to happen when it comes back to that area? They admit defeat, and they exit. And that causes resistance. Resistance. Finally broke above it. Probably going to be support. Probably going to be support. You get the idea. So those levels are hugely important in these big moving stocks because it's coming back and filling in a lot of the traders who've been screwed for the past 7, 8, 9 months. Finally giving them a chance to get out and unlock their money that has been tied up for that long. And now they can actually do something with it. So a lot of decision points are made around these areas. Another area of interest that you can mark up as a secondary, not necessarily the peak highs, but the high closes and opens, right? Where the market closed. Because keep in mind, a lot of traders wait for those candles to close and then jump in. So this one is an example. This one's already been filled in. They bought the close of that candle. It already came back up and allowed them to get out. Nothing we can do there. This one here, already bought the close of it, already came back and allowed them to get out. So these are all filled in, right? There's nothing we can really do with these. But if you go a little bit further back, we can see that the highest point back on this $715 area, the highest point that it actually opened up was up here at 681. The highest point it closed was at 664. That one's already filled in. We go back a little bit further and we see a very common trend. A lot of these get filled in. But if you ever find one of those situations that it's still open, right? Like here, this is a great example right there. Sure, this is a peak high, but there are a lot of traders who maybe waited for the close of this day to buy it, and now they're stuck, and they're still holding it, right? This is above $9. It hasn't come back to that area yet. This is one that would be another level of interest. So not only do you have the high open, high close, but you also have that peak high, and you keep looking for those areas. This one is another example of one that's been filled in. You can see that it closed, it gapped up, went down, opened the next day, and even came back and filled it in again. So that is not a viable area. So just a couple things to keep an eye on when you're looking at analyzing some of these stocks. When they're moving really, really big, sometimes you got to go back really far to find those levels of interest. And they can be hugely interesting when the market comes back to them. Because again, it's all psychological. And putting yourself in the shoes of those traders who have been basically screwed for the past year, you can kind of get a feel for why they're so important. So that's how I analyze these big moving stocks. It's really simple. There's not really a whole lot to it, but it's something that a lot of traders don't really pay attention to. You have to be empathetic to the traders who have been on the wrong side of things to understand how the market moves and reacts in these different areas. Hopefully found that useful. Hopefully found that interesting. Maybe it's something you can add to your tool belt while you're trading. Aside from that, though, as always, if you have any questions, you can send me an email, jbrink@slingshotfutures.com. Don't forget to click the subscribe button and the notification bell icon so you're notified every time we launch one of these videos or go live for analysis. All kinds of fun stuff. Until the next one, we'll see y'all then.